Welcome to Pro News, where we unpack the latest market dynamics and forecast what's ahead. Let's dive into this week's financial currents. Last week, the dollar took a hard hit after the consumer inflation report came out. The data for October was surprisingly weaker than expected, showing a fall in the consumer price index to 3.2% year over year. This seems to have convinced many in the market that the Fed won't be hiking interest rates anytime soon, and might even start reducing them in the next 6 months. Despite this, Fed officials in their recent speeches have shown they're not jumping to such conclusions just yet. Still, plenty of investors believe they've got a better read on the future than the central bank itself. From a technical point of view, the dollar's recent downturn appears to be shifting in a more significant correction. The dollar index has retreated to around 104, a level it first reached back in July and revisited in August. Right now, we're seeing a classic 61.8% Fibonacci retracement of the rise from July to early October. The fact that there was some buying at these levels at the end of the week suggests the dollar has found some support. If this buying momentum continues, the dollar could potentially gain another 2.5% by the end of the year, possibly even revisiting this year's and October 2022's highs. This scenario seems plausible, especially considering the US economy's relative strength, which could support higher interest rates compared to other developed economies. Last week, gold really showed off its technical prowess. While the faltering dollar played a part, it wasn't the main story. Monday saw the price of gold per ounce dipping, but it found solid footing around the 200-day moving average. Interestingly, this also lined up with a crucial Fibonacci retracement level, 61.8% of the rise we saw in October. The fact that there was strong buying at this dip indicates there's a robust demand for gold at these prices. This opens the potential for gold to climb back to the $2,000 to $2,010 range per ounce. Looking ahead to the new week, if we see gold's price marching higher, be ready for a possible surge to new record highs, surpassing $2,080. In a surprising twist, the stock market experienced a sharp upswing in November, breaking a 3-month trend of gradual declines. It's quite unusual to see such a rapid ascent, and it's got a lot of people pondering the reasons behind it. The Nasdaq 100 soared to 16,000, a peak it hadn't reached since January 2022, though it later settled around the 15,800 mark, reminiscent of July's highs. The driving force behind this sudden growth seems to be the unwinding of short positions by speculators who had been betting on a recession hitting the US. From a technical perspective, Nasdaq is now treading into overbought territory. While this doesn't necessarily signal an immediate sell-off, it's a crucial point for us to keep an eye on, particularly to see if buyers continue to show interest at these levels. Stay tuned to Pro News as we continue to monitor these market movements and what they could mean for the future of the stock market. Oil markets had a rough ride from Tuesday to Thursday, with prices tumbling over 9% from their peak and hitting a 4-month low. A few factors put pressure on oil prices. There's news of increasing US inventories, growing worries about global demand slowing down, and reports suggesting some production hikes in OPEC countries. Despite strong consumer activity reports, commercial stockpiles in the US have been on the rise, even with a boost in oil exports. From a technical viewpoint, the sell-off gained momentum after oil prices failed to break above the 200-day moving average. This could potentially open the door for WTI oil prices to slide towards $70 per barrel, a significant level that aligns with the 200-week moving average. These levels had previously served as crucial support back in April and May of this year. Cryptocurrency markets have been on a wild ride lately, with volatility ramping up in every possible way. Take Bitcoin for instance. It took a steep dive of more than 7%, dropping below the $34,500 mark, only to make a dramatic comeback with a surge of over 10% to reach $38,000. Despite these swings, the week ended with Bitcoin down by about 2% and Ether by around 4%. This fluctuation stands in stark contrast to the stock market's explosive growth. So what does this mean? Are we seeing signs of exhaustion from the last crypto rally, or is this just a brief pause before another surge? Given the current landscape, falling oil prices, a strengthening dollar, and equities entering overbought territory, we're leaning towards the first scenario. As always, we'll keep our eyes on the ever-changing crypto market. So, as we look towards the upcoming week, a couple of key events stand out as potential market movers. Keep an eye out for the release of the latest Federal Reserve meeting minutes on Tuesday evening. These minutes often provide valuable insights into the Fed's thinking and future policy directions, which can significantly impact markets. Another major event to watch is the preliminary estimate of Eurozone economic activity, set to be unveiled on Thursday during peak European trading hours. This data will give us a glimpse into the health of the Eurozone economy and could sway market sentiments. Additionally, market responses to Canadian inflation data on Tuesday and Japanese inflation figures on Friday may play a crucial role in determining whether the central banks in Canada and Japan have been successful in managing price increases. As always, we'll be keeping a close eye on these developments. Stay tuned to Pro News for continuous updates and analysis of these events and their potential impact on global markets.